and welcome. You're watching IPO KYC with me, Reema Tendulkar. The company on our radar today is a B2B travel distribution platform, TBO Tek. The company's 1,550 crore IPO opens for subscription on the 8th of May and will close on the 10th of May. The issue comprises of a fresh issue of 400 crore rupees, while the rest is an offer for sale. To talk more about it, we have with us Ankush, Nijhawan and Gaurav Bhatnagar, co-founders and joint managing directors at the company. Gentlemen, thank you very much for speaking with us. Tell us a bit about TBO Tek, the name, what does it stand for, and what exactly does it do?
So the TBO expands into Travel Boutique Online, which was Ankush's former company.
Okay.
Former company, which I basically started from 2000 till about 2005. That's the time when the tech was coming very aggressively in the travel space. So it was either an opportunity or threat. Fortunately, it became an opportunity. I met Gaurav through a common friend. So Travel Boutique Online became TBO. And about tech, I'll let Gaurav talk about it.
Tech was the name of a company that I was running, so it was called Tekriti.
Okay.
So when we came together, we put the words together, TBO and Tech. So that's how the company came into picture.
So, when we think of a travel platform, we think of a Make My Trip, Yatra, Clear Trip, but they're B2C. You are a B2B, platform. So exactly what does the company do?
So look, our tagline is we simplify travel. Now, what does that mean? And especially when we talk about travel, let's talk about outbound travel, right? When I travel from my country to some other country, it's a very large space, 1.5 billion people, so more than India's population actually travels overseas globally. The challenge that happens when you're traveling overseas, especially if you're a first-time traveler, is that you need access to advice, you need access to choices, sometimes you need to visa, sometimes you don't even have a passport, you need Forex, you don't have a big enough credit card to put on the internet, and usually you will go to a travel agent for that. A similar thing happens in a different form and manner in the developed world where people have traveled a lot, but now their trips have become very complex, right? I'm going to spend 3 weeks in India, 6 different cities, then I'll need transfers between the cities. So again, it's complex. Our platform simplifies this by bringing global travel buyers, so travel agents who are serving these complex itineraries. We give them a simple tool where they can go on the system and completely plan these itineraries and sell these itineraries to their customers. On the supply side, which is our airlines, hotels, transfers, sightseeing, anybody who really caters to an inbound traveler, they can come on our platform and market themselves to these travel agents. Right, so that's what the platform does. So it's a simple tool, web-based tool where a travel agent can log in, get access to airline inventory, hotels, transfers, sightseeing, car rentals, rail, etc. They can package it all together, offer it to their customers and sell it.
And the travel agent or the tour operator, we basically put it in 5 buckets. The one which is basically leisure, which is the biggest piece of the outbound travel. Then comes the tour operators, the travel management companies, which are managing large corporates. Some OTAs who are our clients as well. And then obviously the smart apps today, which are actually selling travel as an offering to their customers.
Okay, so just to summarize, your suppliers are hotels and airlines predominantly.
Yes.
And on the buyer side, your customers would be the travel agents and tour operators.
Yes.
Yes.
And you make money from both of them. How do you make money? Because you have used a word called take rate. What is a take rate?
So we make money on the transaction, right? So there is no subscription on either side. So travel agents can use the platform for free and suppliers can list on the platform for free. Every time a transaction happens, we'll make money on the transaction. And there are 2 ways in which this would happen, where the take rate derives from. The hotels business operates on what is called a net rate model. So largely the hotels will offer us a wholesale rate, which is cheaper than what they may offer on their own website. But this rate can only be sold through a travel agent channel, right? It cannot be sold on the internet. So we will have a markup on this rate, and then we'll further give it to the travel agent. So we'll package it with a flight and sell it further.
Okay.
So our revenue on hotels happens as a markup on the net rate. On the airline side, it's a commissionable model where airlines will give us a commission. So the price is decided by the airlines, but they give us a commission. Some of the commission we keep for ourselves. Some of the commission we share with the travel agents.
And the air business is primarily a very high volume business, right? I think which we are pretty large at. And that's how the margins come from us, is because of the volume which we deliver for the airlines.
Okay. So a combination of the rate model and the commission is what you call a take rate.
That's correct.
And the take rate of the company is approximately, I think, 5.4% as of 9 months FY24. But this take rate has been going up. So in FY23, it was 4.8%. In FY22, it was 4.7%, and lower in FY21. What explains the take rate going up?
So part of it is the margin mix is changing because our high margin business, which is the hotels business, is a much higher margin business. And as a share of total business, that business has been growing much faster, which is driving the take rates, right? So if you see the specifically for the segment, like for the hotels business, the take rate is inching up slowly. Airline, you would see, is more or less constant. But the share of hotels business is growing much faster, and hence the overall take rate is improving.
Okay. So the hotel take rate is 8.1%.
Yes.
While the take rate for airlines is about 2.6%.
Yes.
Is there scope for the take rate for airlines to go down from here or hotels to go up from here, given the trajectory?
So on the airline side, Rima, we believe it should stay at what it is.
Okay.
Being a little optimistic, who knows, it might increase because I think the amount of airline capacity being added in India, I think the supply will supersede the demand. So we believe that they should stay at where it is at 2.6. What is important there is our net retention margin, which is gross profit, which is pretty consistent, which is about 1.3, 1.4%. And we're pretty confident that it should remain at the same levels as we move into our next years.
And for hotels, from the current 8.1%, considering it's been going up, and what's the dynamic behind the take rate for hotels going up?
So the hotels business is more fragmented compared to the airline business, and hence the hotels are more comfortable sharing margins with intermediaries, right? That's the reason that the hotels margins are higher than the airline margins. However, we are very cognizant of the fact that the more money we keep for ourselves, we leave less for the travel agents. And hence, as a company, our view is that while our supply will improve with time, we will probably have more buying power with the hotels. We would broadly like to keep our take rates where they are so that we can leave more money on the table for our travel agents. You know, it's important as an intermediary platform to not take too much money off the table.
Okay. So in your assessment, take rate for airlines and hotels should stay at the current levels?
That's our hope.
Yes.
Okay. So then how do the margins of the company pan out from here? The company's margins have been improving. I think you had a negative margin in FY21. As of 9 months, FY24, your margins are close to about 18.8%. So margins have been improving. Part of it can be explained because the contribution of hotels has been going up, while the contribution of airlines, though airlines as a business is growing, has been coming down. But from here on, what's the trajectory for margins as you see it?
See, the margin expansion in our business happens because of operating leverage, right? If you see, it's an internet business, so a lot of our cost is fixed. So once we have started to cover our cost, every incremental transaction that happens on the platform, a majority of it will go to the bottom line. And that is why you're seeing our EBITDA margins are expanding very rapidly, much faster than our take rates. Because after a point, everything that you add to the bottom line will start falling into the, everything you add to the top line will start falling to the bottom line.
Okay. So is it possible for you to break down the cost model for you? For instance, if there is a transaction of 1,000 rupees, a GTV as you call it, gross transaction value of 1,000 rupees, what happens thereafter? How does it flow in terms of the revenues, take rate, costs, etc.?
So on the hotel side, what we just said, our revenues typically 8% on that 1,000 rupees. And that is at a plus, we keep the take rate of 5.5% because the rest of the cost is like incentives back to the bookers and some credit card fees. So technically, our take rate would be, I mean, our net retention would be the 5.5% or of that 1,000 rupees on the hotel side. And air is typically at 1.3. And as Gaurav just said, operating leverage is our story as we keep building.
Sorry to interrupt you. You said the take rate for hotels is 5%.
5.5.
Okay.
No, that's not take rate, that's the net retention margin.
The net retention margin, which is after,
Yes.
so take rate minus
It's a
what
gross
you
profit.
give.
It's a gross profit, yeah.
Absolutely.
Okay, minus the cost of...
Minus the cost of sales, right? Direct
cost of
costs.
sales.
Yeah.
Okay, so for hotels, it's 5.1%.
5.5.
5.5.
5.5. And for airlines, it's
1.3, 1.4 net retention margin.
net retention margins. And these, according to you, should also stay at these current levels.
Yes, and we have been maintaining that in our historic years. So let's see going forward.
Okay, so the way to improve margins is grow the top line.
Yes, so this is important to understand in our business that while the take rate expansion may not happen because we want to, as a platform, we want to not be expensive, either for our suppliers or distributors, but the EBITDA margin can still increase because of the operating leverage in the business. So yes, as the GTV increases or the top line increases, our bottom line should improve faster.
Okay. This is a very fragmented industry. There are not too many peers. So can you talk about your competition? Who's the largest player in a segment that you operate in B2B travel distribution?
So for India, you know, as you rightly said, you know, it's tough for us to find a peer. A reason why is because one, as a B2B, I would probably say we are the only B2B in countries serving the travel fraternity and the travel agents. Second is we sell both air and hotels, which typically, our compare typically sells either air or hotels. So it's a unique position what we have, and I think that's something which we definitely have a first mover advantage here since 2006 till now. On the international side, we would like to, peg ourselves to a company called Webjets, which is based out of Australia. A great company, which we really respect, so that's our typical compare in the international side.
But it's a similar size as you. I think your revenues last year, GTV, was about 22,300. They were at 23,800. So it's similar in size as you.
It is similar, so...
but their margins are higher.
Their margins are higher. So one, Rima, in our business globally, it is more than competition. It's like a co-opetition in our business. Everybody competes with everybody, but everybody also supplies to everybody and everybody buys from everybody. So it's a bit of a, these are all friends. Webjet has a B2B business called Webbed, which is more similar to our business, except two big differences. They are 100% hotels. And hence you see their margins are higher, right? Because our business is half hotels, half air. Air has lower margins, then you will see our margins are lower compared to. So while we are similar in size, I would say on revenue they are bigger than us as it stands today. The other big difference is Webbeds is a very strong supply consolidator, right? So they call themselves, they are a bed bank, which means they work with large players like ourselves. Our core is retail distribution. So the smallest travel agent in India or in the world would be our customer. But for some of our peers, their customers are really large players like ourselves.
Okay. So what's been the historical revenue growth rate of the company, say, over the past 3 or 5 years?
Almost...
The business was...
I can see 141 crore in FY21, which is now, 1,000 crore run rate in 9 months.
Rima, these CAGRs are very misleading right now because of the COVID years, right? So which is why it looks a bit misrepresentative to say that we've, grown.
So what is your own internal assessment, given the size, the opportunity, how much can this company grow at?
See, we only look at it from a perspective how large this industry is and where we are in context of that. Right. So one, it is important to note that we play in the global travel distribution space, right? Outbound travel itself is like almost like a $2 trillion spend, like something like $1.8, $2 trillion spend. What we do right now is, less than $3 billion, right? Out of a $2 trillion spend. So the growth is hopefully not restricted by headroom for growth, right? It's just a very, very large space and it is extremely fragmented. As you can see, there are not a lot of players, so it's still an emerging. Even though travel is kind of like, it feels like travel has been around forever, this space is still emerging. We are one of the emerging players in a new space.
So your total addressable market would be $2 trillion? Is that?
Absolutely, which is obviously, that's what our TAM is typically, and what Gaurav just said, we are minuscule there right now.
And you are at $3 billion?
Yes, absolutely. And one thing important is, Rima, we have positioned ourselves in the new economies, which the travel is just booming, such as India, Brazil, Vietnam, the Middle East. I think that's something which I think we played our bets at the right markets, which we believe is the next growth story, in the outbound business.
So give me say 5-year projection, right? What is your own internal assessment? How much could the revenue of the company be? Where could your margins be? What could be the contribution of air versus, hotels?
I think we are not allowed, and I will not be able to give you forward numbers. All we can say is that the space is large. We've been growing at a nice clip, right? Historically, if you see over the last 15 years, the business has, except obviously like COVID year was a loss-making year. Broadly, we've been growing profitably, and we continue to hope to do that.
Is the fragmentation of the industry perhaps a hindrance to you growing? Because, a lot of hotels and airlines would be looking for ways to cut down their cost and increase their control over distribution.
Actually, it's absolutely contrary, Rima, because I think that's where we come in.
But wouldn't an airline want the bookings to happen through their website directly instead of sharing?
Absolutely. So we believe the domestic
commission
airlines definitely will obviously grab share as they move into the next many years. However, I think we still play a very important role for them because, as you rightly said in the beginning, we're a distribution platform. We're serving almost 1,200 cities and almost 25,000 travel agents in India on an annual basis, right? So you can imagine the strength what we bring through our distribution to the airline supply. Plus hotels, imagine a hotel sitting in London. Once different nationalities is coming, I think the easiest way for them to plug in is a company like TBO, which brings you different nationalities in 100 geographies, And we're solving problem for payments, we're solving problem for service, languages. We operate in 11 languages in our markets, right, with different call centers. So I think that's something which I don't think a hotel chain can handle this all alone, and finding the right travel agents, and securing their payments, etc. So I think we have a very, very meaningful player in the distribution, both for the supply, whether it's hotel or airlines.
Okay, so there is no hindrance to scale.
No.
What, according to you, is the biggest challenge for you right now?
I think, look, the challenge is we are building a very global, multinational business sitting out of India, a tech business sitting out of India, and those playbooks don't exist, right? So we are learning as we go. And that honestly is our biggest challenge right now, that we expand from being a very India-centric company to become a very global business. How do you build a global leadership team? How do you run global operations, right? Typically in India, we're very used to being a subsidiary of an MNC, and that is the playbook we understand in India. But now we are reversing the playbook. We are saying we are the HO, and then our subsidiaries are overseas. How do you build that playbook out? How do you run your operations? How do you hire globally? How do you build a brand, with employees, employers, suppliers globally? I think execution is our biggest challenge, and frankly, that is also the biggest excitement in our business.
So let me ask you about General Atlantic. They have a 15% stake in the company, and they acquired recently. 7.5%, I think, was acquired in October of 2023, and the 7.5% was further acquired in February of 2023. So at what valuation did they come in?
So first of all, we were very happy when GA came on board. The valuation at that time was 6,000 crores.
Today you're at 10,000 crore.
Yes.
So what changed in 6 months for your valuations to go up?
I think it was more of a secondary transaction, with the Firma Capital with GA, because the Firma Capital has been with us since 2018. So obviously they wanted to kind of offload some of their secondary shares, which was basically understanding between the two investors. Right.
So why not come out with a valuation at 6,000 crore? Because some retail shareholders would feel cheated, right? You're giving a large private equity player into the company at a much lower valuation.
Look, Rima, like Ankush said, a transaction that happens between two shareholders outside of the business is really not in our control, not in the company's management's control, right? Our obligation to all shareholders is to provide them a good return. And whether it was Naspers selling their equity to a Firma in 2018 with a very good return, or a Firma being able to get a great return on where they came in from, is really something from our obligation is to make sure that we put options on the table. Shareholders have a choice to take those options or not take those options or negotiate amongst themselves, right? So it's very hard for us to control
that's a transaction between two entities.
Correct.
When you came out with the IPO, you also had a choice, right? Maybe 6,000 crore of a valuation, but your valuation, aided by bankers, has been set at 10,000 crore.
This is really, we are guided by the bankers on this, right? You know the process, right? We run a roadshow, the bankers take us through the roadshow, they come back to us and give us a guidance on, look, this is where you should price yourself.
Okay.
Right? So we don't have, we are doing it for the first time, right? So we're largely guided by what the bankers tell us.
And I think our peers are also trading, at the similar P multiples, right? And
the global peers, where?
Global and Indian peers, yeah.
Okay, so one final question then, both of you. This is a great milestone, right? In your personal journey, both of you bootstrapped the company. It was started in 2006, and you had both invested just 50 lakh rupees each as the early capital, so 1 crore. And today it's a 10,000 crore company. So, how do you feel right now? And, what's been, prior to this, the biggest milestone in the company? Or tell us a little bit about your journey.
So, first, I think Rima came from the travel background, right? So obviously met Gaurav through a common friend, and Gaurav will talk about his profile after me. But I think what both of us realized that we value capital, even today, in spite of where we are. We have had some amazing milestones, I can assure you that. We have seen a lot of bumps also in our journey over the last 18 years. But I think both of us stood tall. We fundamentally believed in our business and what we were building. And I think today is probably one of the happiest days, when our price band is out, and obviously we are at CNBC talking about our story. So I think it's one of the happiest moments, for both of us, in the last 18 years.
And what was the seed behind this idea? What was the apple falling on the tree kind of moment?
In retrospect, you can feel, very wise about creating this business model. It happened very, very organically. I was working at Microsoft after graduating from IIT and wanted to come back to India to become an entrepreneur. Mid-2000s, the very early days of the internet. So the view was that when internet takes off, e-commerce comes, travel is the easiest thing to take off because it doesn't require logistics or last mile support, doesn't require delivery logistics, etc. So I wanted to do a travel business. That's how I met Ankush. We were going to build an OTA like everybody does, right? The first question everybody keeps asking us is, yeah, B2C, why is it not a B2C? And we were going to do the same thing. But in that 1 year, so many other B2Cs, Make My Trip, Yatra, Clear Trip, all of them got funded in that 1 year. We already felt that this space is too crowded before we started. At the same time, the low-cost carriers were starting out, the Indigo, SpiceJet, Go Air, Air Deccan in those days. And the travel agents had this unique problem that we just came across, that they had the full-service carriers, which is in those days Kingfisher, Jet Airways, Air India. They were on something called a GDS, but the low-cost carriers had their own website. And travel agents had this big problem that to make one search and one booking, they had to go to 4 different places. So that's a simple tool we created. Said, why don't you put everything on one place and you work with us? That's how it started, and now it evolved from there.
You said the company's been bootstrapped, right? You all put in 1 crore together. What about the other primary investments to grow this business to 10,000 crores?
So one thing which we're very proud of, the only primary we ever raised was 60 crores in 2012 when Naspers invested with us in those 12 years back. And then since then, we got a Firma Capital in 2018. It was a secondary transaction between a Firma and Naspers. Then obviously the recent one of General Atlantic, which was in 2023. And then obviously, hopefully, the capital markets now. Right.
And this company has been profitable for how long now?
From day one, except the COVID year, right? So something, as I said, we are very, very value conscious, and we made sure that we make money from 2006 till today, except the 1 year, which was COVID, which was beyond our control.
So at the bottom line, it's always been profitable?
Yes, absolutely.
Okay, and you're raising 400 crore of a fresh issue. And in terms of adding value, acquisitions is something that the company has been making periodically. Talk to us about how you're planning to utilize this money.
So several things. Definitely acquisitions is, I think, one of the objects of the issue. But look, our business grows on 2 simple levers, right? Keep adding more supply on the platform and keep adding on buyers on the platform, and then just keep removing friction from the platform. Right? All of this takes money because especially buyer growth requires us to build global presence, have offices, feet on street sales teams across the globe. So that is something that we'll be investing in. Similarly, on the supply side, right, our focus is building more supply depth as well as breadth. So by depth, I mean better rates, more hotels. By breadth, I mean beyond hotels, right? Can we also provide good car rental supply, good transfers, Europe Rail, Indian Rail, right? So building breadth and depth of supply. And the third bit is the platform itself. We are a tech business, removing friction from the platform, making it easier to use, making sure the results are more discoverable, the hotels are easier to sell, promos appear on the platform. So it requires a fair bit of tech and data investment. So that's where the money is going to go.
Gentlemen, thank you very much for joining us today, and wish you all the very best. Look forward to more interactions.
Thank you.
Thank you.
Thank you.